Alright, good afternoon everybody. Today is Wednesday the 17th day of July 2024. Welcome to this session of Target View Trades. Now, I got a bunch of things that I want to go over, but the title of the whole thing was to go over the options on ETFs, options on stocks, options on ETFs, options on futures. I don't really know how to do options on crypto. I'm sure you can do options on crypto and options on futures on crypto, but I have, well, let me just shut that off. I have a bunch of stuff that I'm doing right now. You guys all know, well, I'm going to jump into a couple of things right here, but you guys all know, I trade for a living, and this stuff that I'm doing right here is just stuff that I keep creating to make my trading better, and then I'm able to pass it on to you guys, and then if I work with it every day while you guys are working with it every day, it's like the whole hive mind mentality. And if you guys see things that look good that we can use in the future as a group we can all benefit from, that's great. But in the meantime, I'm always going to be looking for ways to improve things. Toward that end, I did find a way to improve things. But we're still in the beta from the last thing. The last thing we had improved, well, we had added the ability for one, the hot points, and that's in right now, and that's working really well. The ability to adjust the pivot levels so the targets get adjusted. If the targets are too far out or they're too close, you can adjust the pivot levels. That's all part of the beta. That's in this beta, the TV Trades beta version right here. Okay, so down here you would have the pivot look back. You adjust that. The bigger the number, the farther away the pivots are going to be, the bigger the targets are going to be. The smaller the number, the closer the pivot's going to be, the smaller the targets are going to be. That's the way that works. That was one of the things. The hot points, you have to turn the hot points on. They're not on by default. All right, if you have to have the beta version also. But you have to turn the hot points on. By default, they're right in here. The hot tip long, hot tip short, and hot tip for the MTT. Now the mid-trend trade, you're not going to get many hot tips on the mid-trend trades. They're usually going to be right at the beginning, but every now and then you'll get one on a mid-trend trade that's a hot tip. Okay, but they're really the ones at the beginning here. The blue arrows and the red arrows are the ones that you're going to get the hot tips on mostly. And hot tips mean it's white because it's white hot tips. Okay, that was my thinking behind that. John, you just got here. Good. Okay. So I'm just really getting started. Now I got to do this part at the beginning of every one of these things. If you're trading futures, this is futures right here. Now I'm going to get into futures and stocks and ETFs, and then get into options too. But if you're trading futures, you have to have a futures data feed. All right, you got to pay for data, and to do that, you go here. First of all, you have to have TradingView, right? You have to have TradingView, and when you log into TradingView, you have to give us this thing right here, TV Trades. That's mine. If you hover over this, it says I'm logged in as TV Trades. Whatever you're logged in as is what I need to enable the indicators for you. Okay, that's what I need to enable the indicators for you. Now, I have a lot of things that I want to cover here, so I got to kind of, I usually have a list, and I go down a list and I check things off, but I didn't write a list today. I lost power yesterday, and I had to restart everything, redo everything. You guys know how that works out. So I fell a little bit behind. But anyway, to get the data, go over here to whatever it is. Go to TV Trades. Well, for me, it's TV Trades. Then go to Account and Billing. All right. Let me save this first. I do this every time. I do that, and I save that. Go here. Go to Accounts and Billing. And in here for Accounts and Billing, if you're going to trade futures, like this, then go to Accounts and Billing. And what you need, the only thing you need to have for trading futures is this group right here. This. Now, I was just told by one of our guys who's been using TradingView, who's been with us for a really long time. He got billed annually for this yesterday. For me it's $7 a month, but he got billed $84 yesterday. So it's a whole annual thing that he got billed for. I didn't even know you could do the annual billing. But anyway, they charged me $7 a month for data for all these different exchanges. That's a super deal. $7 a month. I used to pay $500 a month on TradeStation way back in the beginning for not even that much data for the individual ones. Like the CME, I'd pay a certain amount, and for comics, I'd pay a certain amount. CBOT, I pay a certain amount. It was crazy. But it's not like that anymore. Anyway, it's $7 a month to get the live data feed if you're going to trade futures. All right. That was a lot of stuff. I had to do that. And I have to do that at the beginning of everything because I've had people take the trial and actually even sign up and subscribe and trade using delayed data and then come back to me and say, this doesn't work anywhere near as good as what you're saying it does, and it doesn't look anything like yours. And I'm saying, oh, let's look at what you got going on. And if you are going to trade, even in demo, with delayed data, then you have to use their DOM. All right, you have to use the TradingView DOM, and to do that, if you do Shift D like that, oops, sorry, you're going to be connected to the paper trading thing down here. Let me connect to the paper trading thing. Hang on. If you're going to do it in demo using their DOM, then you got to connect to the paper trading thing like this and do Shift D like that. All right. If you have delayed data and you're going to practice trading with delayed data, you have to practice trading on their DOM because you're going to be using their DOM with their delayed data. All right, their delayed data, their DOM, that's what you're going to be doing. It'll match up. But if you're trading with some other system, like this particular person had a Ninja account, and he was trading with his Ninja account, his demo Ninja account that did not have delayed data, taking signals from TradingView that did have delayed data, and he was fussing because he wasn't doing very well. Well, that's because all your signals are 10 minutes late. Every trade you're taking is 10 minutes late. I mean, nothing should have matched up number-wise, but wasn't really paying attention to that, I guess. Anyway, I just wanted to make sure you guys were all aware of that. Okay. So, in addition to that, options. All right, let me save this again, and let's go here to the multi-asset thing. Okay. Now I usually have this running in the morning for a little while. In the YouTube stream, I try to do a YouTube stream for a little while every day, and you can see in here when you get triggers and things like. Let's look at Tesla. All right, and look at the alerts that came in for Tesla today. Now this is TV Trades Beta. Okay, so this is TV Trades Beta. Let me see what I got turned on in here. Inputs, just the longs. You don't really need the bias. Okay, well, it doesn't look like I have a lot of long trades in here on Tesla today. Well, there was one back here, right, and one over there. All right, so if you come in here and you see in here it says Tesla buy coming up. I used to say buy soon, buy long or buy soon is what I had, but I changed the word soon to coming up because when I said buy soon, it didn't. Somebody could interpret that to mean like buy any reason you can see coming up. There's a reason to buy. If you have any reason, just buy soon, buy now, buy in like a minute from now. But saying buy coming up lets you know that there's an actual trade that's coming up. But you see, you get the warning over here. By default, you're going to get a warning. If you have any alerts on, you're going to get a warning over here. You're going to get a notice over here. Even if you have all the other stuff shut off, it's going to put a log over here. Okay, as long as you have an alert active in here, it's going to put a log in here. Now you can minimize that so you don't see it, but it's always going to put a log in there when you get an alert. Now when you do the alerts, let me just show you. If you want to put an alert on, you have to do it like this. You grab the TV Trades Beta, come in here, whatever you want to put an alert on, choose it. If you want to do like the mid-trend trade, I got to show you this too. If you're going to put an alert on like this, I was just going to do exactly the wrong thing. All right, now I don't have the mid-trend trades on, and I don't have any shorts on. But if I were to say I want to see a mid-trend trade sell alert, and I can do once per bar close, and in here it says mid-trend trade sell alert, sell short condition met. If I hit create on this, and I can put the notification on every one of these things and hit create, and you know what's never going to happen? Sorry, undo the webhook. What's never going to happen if I do this is it's never going to give me that alert. Now it created the alert. Okay, over here, if we look in the top section right here. It just created that alert right there. Alright, that alert that I just checked all that stuff off on, all that. It created the alert, but that alert is never ever going to trigger, because when I created it, I did not have the mid-trend trade on with the shorts on. Alright? Because it knows when you put it on, it takes into account when you put it on. It uses that information to set the alert. It says, okay, this is what we got going. Anytime we get one of these alerts, we're going to do it. If you don't have it set, you're never going to get one. If you set it after the fact, it doesn't change that. It's too late. You got to go back and do this over again. Okay? I just want to make sure you all understand that. I am recording this, right? Yeah, I am. Okay. Just wanted to make sure. So, speaking of that, the mid-trend trades. You see, this is Tesla with the mid-trend trades, and you have a lot of short mid-trend trades right here because we've had a lot of shorting opportunities lately in Tesla. Now that in regular trading world, for most people who are trading equities, who are trading stocks, they're not going to be shorting stocks. When you get a signal to short stock, you're not going to be shorting a stock. What you can do, though, is buy a put option right there. You can buy a put option right there and say, okay, it says it's going to go down, and the targets are based upon the green and not the green. The targets are based upon the red and the blue arrows. These blue arrows right here and these red arrows right here. That's what the targets are based upon. All right. So this right here said it's going to go all the way down to 254.74. Now it hasn't gotten down there yet, but if you shorted up here at 248.97, let's say you shorted 248s from up here. Okay, now I don't know what the 248s are worth right now, and I don't know what they were worth a few minutes ago. But let me go out to Schwab here and see if I can figure this out. Okay, I meant to have this open for you. Here it is. Okay, let me log back in. I did have all this stuff out earlier today. I think I made one screenshot of it earlier today. Let me see if I can find that. If anybody's got any questions, just type them in, okay? If anybody comes up with any questions at all, just type them in. Alright, so this is the 260s this morning. Now, these are just the calls this morning. They weren't really the puts. These are the calls this morning. Because it gave a potential long trade this morning, so I was looking at the calls. But these are the 260s, and I wasn't really looking at the puts. So let's just look at the puts. Hang on, I got it open over here. It's going to text me a message first. Hold on. And that thing over there has nothing to deal with right now, so I can ignore that. And there it is, 046041. 046041. Log in. And let's see, I just want to see chains. Here we go, and look at Tesla. That's the chain we want to look at. So what was I saying? The 248s is what I was saying, and this was from back here at 1351. So 2 hours ago. And well, they don't have 251s, but we'll look at the 248s. I'm sorry, 248s. They don't have 248s. They had 247.50s and 250s. So we'll just look at the 250, okay? And let's look at the contract details. And here, I'll make a screenshot of that and bring it over and show it to you. Oh, crap. I forgot to do this, too. Alright. Hang on, guys. Just give me a second. I'll make it worth the wait here in just a minute. Maybe. Here's the contract details. Okay, so here's the contract details on the oh, wait a minute, what am I looking at here? Hang on. I'm looking at the wrong ones. These are calls inputs. I just want to look at puts. Let's look at just puts, and we're looking at 250s on on the current contract. Let's do contract details. Here it is. And let me screenshot this one. Alright. So here it is. The days ranges from $2.30 up to $7.25. Currently it's at $6.15. So it's gone down. As it pulled back up right here, the prices dropped down some. Now I don't have a chart where I can show you how much it dropped, but you can tell the days range, it was at 230, and if at the high of the day, back up here, which was that the high of the day? That wasn't the high of the day, but it's the middle of the day. Okay, the high of the day was right up here, so it was probably somewhere in the middle, right there. It wasn't anywhere near the low, but right here it was probably worth about $5 right there, right? And from there, where it gave you that signal down to here, I'm sure it gained value. I don't know how much it gained, but significant value. And I don't know who that is. I just sent that. Anyway, I'm sure this microphone over here is off. It is not off. There, now it is off. But the idea is you get the shorting opportunity here, and this is on a 50 range. So on a 50 range, it's it's usually, if it's going to go in the right direction, it's going to go significantly in the right direction. Now, one of the questions that was emailed to me was, how do you trail your stop? Okay, and that's an interesting question because there are so many things that go into option trading. All right, there are so many things that are outside of the actual scope of TV trades that go into option trading. There's all the Greeks that go into pricing of options, and you can see the days changed today. It was up 101% from the $2.30 that it started out. That was a 52-week range low. From $2.30 that it started out, it's made it up to $6.15. What the Greeks are looking at, they're looking at the time to expiration, the amount of volatility in the price, and those are the major things. The time to expiration, the amount of volatility in the price are what they're looking at. Now, that stuff changes. The time to expiration is constantly decreasing, so that's changing constantly. And the way that I look at options, when I buy an option, you accept the risk of the trade when you buy an option. The most you can lose is what you paid for that option, right? I'm not sure if you shouldn't enable the bias when trading the ES7 range. Okay, Schwab, I will help you with that in just a minute. Okay. When you're buying an option, you're accepting the risk, the full risk of the full cost of the option. All right. So if it expires worthless, that's that ahead of time. That's the maximum cost that you have is if that expires worthless. You can, if things don't work out, like if you shorted right here, if you bought a put right here, and that was at 1306, and then 30 minutes later it's up here and it's not going in your favor at all, there's still some value in that option. If you want to bail out right there and get some value out of the option while you still can and wait for another signal that might be better, that you think might be better, you could wait for this one or wait for the one where the arrow is actually below the initial one. The mid-trend trade arrow is actually below the initial one, and that should give you a second leg down, similar to the first leg down. It should give you a second leg down. If you want to wait for that after you stop out on this, then that's okay. But I don't typically go into options with a stop on. All right, I go into options with profit targets on. Like I'll have a 50. Options I do scale out on. Where with futures, when I'm trading futures, I'm all in and all out all the time. It goes too fast, and I don't have time to scale things in and out when I'm doing that. But when I'm trading options, first of all, I'm not placing trades every a couple times a minute. It takes me a couple minutes to actually place a trade because you practically got to fill out a form to do it. I mean, you can do it in a DOM, but I don't like doing it that way. I like to actually fill out the form and say, this is the price, you know, that I want to enter at, and this is the price where I want to take my first profit, usually 50%, and then another one at 100%, and then I let the rest ride. But I don't use a trailing stop with options. That was the question. Mark had asked me that. He asked me in an email. I don't know if Mark's in here right now, but he had asked me in an email. Mark is in here right now. He had asked me in an email last night, and I said I would address it today if I could, as much as I could anyway. That's how I deal with options and stops and targets. I'm more focused on taking profit on the option than I am on protecting my risk, because I've accepted the risk whenever I get into the option. Okay, I've accepted that the risk is 100% of what I paid for the option, and there's a good chance I'm gonna lose most of that, if not all of it. With an option, you're taking position that price is going to move significantly in one direction or another, and if you're doing 0 DTE options, that gets rid of the theta portion, the time portion of the Greeks. For the most part, it gets rid of that. But I mean, you're left holding the bag a lot on that, because you got to have somebody who's going to buy it from you. And if you're running out of time on that day, there's nobody that's going to buy that from you. So I like to have a couple of days left. That was another question I think that was presented to me. Why do I like to do ones that are a couple of days out? Because I like to have somebody there on the other side of that that's going to want to buy it from me. If there's no time left, nobody's going to buy it from me. I'm going to be left holding that bag. Alright, that was a lot of information in 22 minutes. So, you guys, Shabab, let me answer your question first, okay? You think correctly, this method is pullback entries only. Well, no, not the initial method is not. Not the initial signal is not pullback. Alright, it's waiting for a couple of things to happen, and it's the origination of it right here. It's like the trend begins and it notices it and it changes. Like right here, you had a mid-trend trade long right here that went, I don't know how much that went into profit, 250.01, so it went up 37 cents. And then it changed directions. On this, your stop would have been right here. On a mid-trend trade, your stop would have been right here, right? So when it changed directions right here, this, when you're just looking at this little bit, let me show you that. Well, here, let me do it this way. Okay, ignore the fact that this is a DOM. If you're just looking at this little bit, and this is the next thing that you see, and this is the next thing you see, you just have this one right here that just stopped you out for 30 cents, and then you get this one right here. You're gonna be hesitant to take this trade right here, right? Because it's a direction change. Now this is Tesla. So if this were the ES, we'll say this is the ES, and we'll say the same thing happened here on the ES. Having the bias on Shabab is going to eliminate most of these conditions where you have one going long and one going short like that right away. Most of the time it's going to eliminate those conditions, right? It will happen every now and then, but it'll eliminate most of that stuff. Alright, now because I'm doing this with an equity, I'm not doing it with the ES. Let me just go to the ES. I'll do it with the ES. Okay. Just to answer your question, like this stuff right in here, where I'm going in both directions like that. If you throw the bias level on like that, so you get rid of all the stuff going the opposite direction right there. So it captured this in the trend, like right here. I only have the longs on this right here, I guess. No, I have them both on. But it captured this. You're in an uptrend. It captured that. Then it captured it again right here. And then you got the pullback in here. The mid-trend trades, those are pullbacks, Shabab. Okay, they're not all pullbacks, but the mid-trend trades are pullbacks. Okay. If it changes directions like this, changes the background, changes directions, then it's kind of like a pullback trade, continuation trade. Alright, but you see how this one here is pulled down below all this stuff right here, and it's finding support right here where there was support before. It's probably going to turn here and move back up, but where should it move back up to? Right here, right? I'm sorry, I'm going into a little more detail than I need to, but this is, it was part of today's lesson plan. So down here, back up to here, and then down there is what it should do if it's going to continue in this way. This is support right here. If it finds support, it could just go sideways here for a little while and then move up. But for what it's worth, right now it's not giving you anything. It's not giving you a single indication. All right. All right. So the options. I was just showing you options here on Tesla, right? Let me get rid of this thing because that's garbage. But I was showing you options on Tesla. I wasn't actually showing you the options. I was just showing you the. Did I? Yeah, I did show you some options. In the range of the option, you can see the day's range of the option was from $2.30 all the way up to $7.25. So it's just about 200% day's range right there, right? Well, 150. And that's the beauty of using options. Now it goes away as quick as it goes up, and when you have an option, usually the way it's going to be priced, you're going to have it doesn't show the bid and ask on this, but you're going to have a bid and an ask, and there's going to be a spread in the bid and the ask, and then you can try to buy within the spread, and that a lot of times will get filled because there's somebody actually on the other side trying to sell their option, right? So a lot of times that'll get filled. If you split the spread, you'll get a better price, but sometimes you won't get filled at all, and you end up missing out on a trade. So you can buy the bid, and you can buy the ask, sell the bid, and you get filled. You can split it, and maybe you'll get filled, maybe you won't. All right. Yeah, on the ES7 range, I would enable the bias line for sure, Shabab. Okay. This is like the this is ES50 range, and you can see what it did right there, but if you put it on the 7 range, this is with the bias line on. If you shut the bias line off, you're going to see a bunch more conflicting signals, I think. No, not a bunch more, but a couple right in here. Right in here. See, what the bias does is it, without you seeing it, it sticks this on here. Sticks this on. Now, 233 is just a fib number. You can change that number to be whatever you want. Alright, it's just a fib number, kind of middle of the road fib number. But what it says is below this number, when you have the bias on, below this number you're only going to get short, and below that line you're only going to get short trades, and above that line you're only going to get long trades. Okay, that's what it says. So everything below here that's pointing up, if you turn the bias on, is going to go away. All of these things that are pointing up, when you turn that bias on, they're going to go away. See? Now if you change the bias, if you change this to like a 50, like Rico does all the time, and then you change this to a 50, the same logic applies. It's just now the number is 50 instead. Alright, so you're only going to get shorts below the 50, you're only going to get longs above the 50. Now it's got to close above the 50, or close below the 50. Alright, you're not going to get any shorts up here, and you're not going to get any longs down here. That's how that works. Okay? So I don't want you guys having any indicators on your charts, because that's what makes you second guess everything. You see the arrow, you take the arrow. Alright? You can set that bias to be whatever you want. If you want it to be a huge thing, if you think you're in a huge uptrend day, then you can change that bias to be, the next level up, I think, is what? Hang on, what are the fib numbers? 144 plus 89 is 233 plus 144. That's the next one. 233 plus 144, whatever that is. 377, is that it? Yeah, that's what it is. 233 plus 144. It's 377. That's the next fib number up. Right, and after that, it's 6 something, isn't it? John, a smarter bias feature that is more like a no trade zone. Well, you know what? It's funny you ask about that, John. I was saying that, I'm always trying to make things better and always trying to create new stuff that's going to be better and make everything better for everybody, including me. So toward that end, I have this new thing that I created. Where the heck is it? I guess I didn't actually create it that far, did I? Let me go to Pine Editor. Hopefully I didn't delete it. I think this is it right here. I hit add to chart. There it is. Does that ring a bell? Trading zone. Except this is different. I don't want you to have any indicators on your chart, and you're not going to have this indicator either. But if I go in here and I turn the control on, let me make it this and make it columns like that. Okay. Now you're not going to see this. This isn't going to be anything that you see. But this is something that I'm working on. If you get, it's good for the mid-trend trades particularly, but if you get something like this, it's shorting down into a blue one, you're not going to get a trade. If you get something like this, that's going long up into a red one, you're not going to get a trade. Okay, long up into a red one, you're not going to get a trade. Short into a blue one, you're not going to get a trade. It takes out a lot of trades, but it takes out a lot of losing trades, a lot more losing trades than winning trades. Okay, you see right there, right there, right there, there's 3 of them right there that it would have taken out for you. So I'm always working on better solutions to minimize the number of stop outs. Stop outs are part of trading. You just got to accept that you're going to get stop outs. If you don't accept that, well, then maybe trading's not for you. But know that I'm always trying to minimize it and reduce the number of stop outs that we get. So this is kind of something that I'm working on in the background right now, and it'll probably be in some beta version coming up. But it's it's to help filter things, and it will be called something like a filter, and you won't see it like this. Okay, down at the bottom you won't see it. You won't have anything down there. It'll be in here. It'll have something in here that says filter. And just so you know, that's what it's the kind of thing that it's looking at. It's looking at all the math, put all those things where they went, and it'll filter out some things. Okay, and that was because John had asked for that. No. What should you do if you are in an option trade and the stock trades through the stop and the targets don't change? If the targets are only going to change if the the targets are based upon the blue and the red arrows, right? The blue and the red arrows. So like this one right here, when it dropped all the way through here, the targets were all the same until it got this blue arrow right here, and then the targets changed. If this were red arrow, then all the targets would have changed to bearish targets. Okay, but right here, even though it dropped through the stop, which was right here, all the targets were the same until you get your next blue arrow or red arrow, whichever one it is. Over here, let me see if I can find another instance of something like that. Now this one right here just made it through the stop, but right here your targets wouldn't have changed. Your targets would still be the same if you went all the way back here. This one right here, your targets would still be the same until you got to here, and then it would change the targets. Right? They'd probably be pretty much the same, except they'd probably be an added target right here, because you had this pivot right there. Okay, mark. Hang on. I'm scrolling up to get all the things. What is the best time for a short-term options? I would do them on like a 5-minute, maybe less. If you're gonna do it on a minute chart, you're talking time. But because of the way that I like to trade, I wouldn't. If you're talking about an ETF like the SPY, let's look at the SPY. Okay, SPY, and look at the SPY, and this is on a 7 range. The SPY is way too high a number for it to go on a 7 range, but it could go on 25 range, which is a quarter. Okay, now I don't know. I'd have to look and see how much of a difference. The way that it all works, the theta and all that stuff that you asked about, it's based upon what a $1 move would be, and So you could actually go to 100 range, which is a $1 move. All right, and then, if you get a blue arrow suggesting it's going to move up several dollars, then that is a good. I would think that would be a good time frame for you to use if you're using. You're talking short term. When you say short term, you're talking 0 DTE. Is that what you mean? But $1 is what the Greeks are based upon, a $1 move in the underlying currency, not currency, underlying item. But if you go to 100 range, and that's $1, so that should give you an indication of what you're looking at. But you're probably not going to get that many signals with a with 100 range, because it's just not that volatile. If you go back down to the 25, then you should get a pretty good idea. If you get a green arrow or a blue arrow, and you're in sort of a trend, like here you have higher lows like that. If you get a blue or a green arrow when you have higher lows, then I would expect that that's going to push price up. And if it does push price up, then the calls should go up in value, especially if they have 0 time left in them. But you'd have to buy something right there at the money, or maybe even something in the money, which is going to be more expensive. Okay. I don't do the 0 DTE options. I don't have any experience with that. So, I can only talk to what I would do, knowing what I do know about what I do know about. But I would go down to a time frame like this, something like this, a quarter per bar, and you get an indication like this, and you're going to expect it to get up to the prior swing high, which is right here, which it almost did, and see how far that is, from 557.64 up to 558. That's not even a full buck. So it's not really like it's going to move significantly there. All right, do I have the bias on this? I don't think I do. Do I? I do have that one, but on the 50. Bias on the 50 is not really made for this kind of stuff. But so you got a ton of indications in here that it was going to go down, and when you get the first one, the first thing I always do is look at the prior swing high or swing low. That's where it should be going to. Right, the first thing that it should do, no matter what market, it's all, everything is fractal in nature. All the stuff that I do in the morning, that most of you guys have seen me do in the morning, it's all fractal in nature. So you're looking for the swing high or low every time. The markets are always trying to do the same thing. They're always trying to trend. Markets don't want to go sideways. They want to trend. And they either want to trend up or down. And you can take advantage of it by understanding that little piece of information ahead of time, that every time it pulls back like this, if the pullback is proportional to the last leg up, it's ready to make another leg up. If it's not proportional to the last leg up, meaning the pullback exceeds the prior swing low on the pullback, something like this right here, where this is kind of crazy, where you had this was good, had a decent pullback, leg up, good, decent pullback, and then bam, you're below all these swing lows over here. You're not thinking long anymore when it does that. With futures, you'd be expecting it to fill that gap right away, and it will fill that gap right away with futures. But with other things like equities, and this is equity based, it doesn't necessarily fill that gap right away, and then everything changes. So now you're thinking, okay, it's got to move down, 50% move up. It should move down to this level right here, is what I'd be thinking. So as far as options go, the value of the change between here and here is not only dependent upon the dollar value of the change between here and here, but it's dependent upon how long it takes to go from here to here. Right? You see, from there to there is how long it took. If it went from here, bam, right down to here, then the value of that option would go up significantly. But if it drags it out all the way over to here, then it's going to be a gradual increase and slower, less, smaller increase, slower, less, smaller, slower, smaller, whatever, all that stuff. Increase to the option. Okay. But the idea, the whole notion though, is that you got the short right here and you were going to stick it out. Now, you don't want to let the thing go down to 0, but you accepted the risk in here that it was going to get down to at least this level right here, is what I would think. And, you have all your targets in here. So the first target, I don't even know if that's the first target. Well, I'm basing it off of something else. Okay, so like this one right here, I would expect right here is the first place it should get to, 57, and that is the first target right there. And the next one is right here, the next target, and it spells it all out in here for you. But that is, that's what I'd be expecting out of it. And if it pulls back, as long as it doesn't pull back like way up above this level over here, where it's a direction change, then then I'd stick it out. Okay, Mark, did I answer your question? I know you would ask me, because you would send me an email last week too, after the meeting, and I wanted to make sure I covered as much as I can. It would have been a lot of words last night when I was responding to your email. That would have been a lot of words for me to put into an email. That's why I said I would respond to it in here today as best I can with words. Alright. So, I didn't go over this stuff. There was something that I did the other day, yesterday as a matter of fact. I met with these people, and I had to make some changes. Go here. I had to make some changes in here. In here. Where the heck is it? That's email. I guess I just have to type it in. TargetViewTrades.com. Alright. I had to make some changes. We're going to have different stuff here. If you guys give me more stuff to go over next week, I'll be happy to go over it with you next week, right, for next week's meeting. But in here, I had to take the crypto stuff out of here. I had to take the Bitcoin and the Ethereum off of here. And I had to take the crypto thing that I used to have down here off. So now I have these two things. I'm going to get rid of one of these. But if you haven't taken the trial with us and you wanted, the trial is free. It's $25 after the 3-day trial. If you want to do it on a weekly basis, it's $90 a month after the 3-day trial. If you want to do it on a monthly basis, or it's $997 a year. This is like a 23% discount over this. This is a 10% discount over this, and this is this. It's only $25 if you want to try it out for a week or more. Okay. Yes, I want to show you all that because I hadn't shown you that yet. If you don't have charts, you have to have TradingView charts. Go here to targetviewtrades.com, click on getting charts. It's going to be here. Click on TradingView charts. Use the monthly option in here. Alright, I already showed you that you have to get your own data, but use the monthly option. If you have Essential, you can have 2 charts with 20 technical alerts. That's the alerts that we use, are the technical alerts. Alright. You can set price alerts, but those are different than technical alerts. Technical alerts are dependent upon the code that I write. Now you can do the 4 chart thing with the plus, and with that you get 100 alerts. And this is the premium, that's what I have, and I get 400 alerts. Okay, I had to show you that too. Let me close that. And this recording, this webinar that we're doing right now later today will be right here. It'll be at the top of this page. Okay, if you go to targetviewtrades.com, TV Trades web recordings, it'll be right at the top of that page. If you have any questions about any of the settings, I have to go through here and update this, but this is little videos about all the settings that we have, right? The targets, target lines, all that stuff. The bias level. The bias level right here, Shabab, this is where it goes into that. A little bit of detail in there about that, okay? And the targets and the warnings, and yeah, the warning. I gotta rename that. Notices. That's what it's gonna say. And the mid-trend trade is all in there too. Right. So that's all here on the home page. I wanted to show you that. Now, I said I was going to show you other stuff with options. I know I'm going really fast, but I feel like I have a ton of information that you guys had asked me about. So I want to make sure I cover as much as I can. Slow down for a second. Take a breath. I'll take a drink. That's that. Okay. I have. Did I say I had to remove yeah, I had to remove anything that had to do with cryptocurrencies in here. because Facebook and Google, they don't like Forex and they don't like anything that's got to do with the cryptocurrency. And they flag any kind of advertising that I do. And Facebook will just close the account. So just close the account and I can never open an account again. And the account that I have with Facebook is actually linked to my personal account. So if they close the account, they'll close my personal account too. So anything that I have at Facebook on my personal account will get knocked out too. And I was meeting with these Russian people yesterday. Well, not Russian. They're actually Ukrainian people yesterday. I was working with them and they were helping me fix things up as far as Facebook goes. And they basically went to the point where I said I don't want to do Facebook anymore. But I took that stuff off the website. Alright, so yeah, back in here. The other thing that I wanted to show you guys, it was options on futures. I wanted to show you a little bit about options on futures and how they work. If because you can do the same stuff in here with futures options that we're just doing, like the ETFs. You can do the same thing in here with futures options, and also micros. Right now, one of the things that we were just talking about as far as options go is the theta. Right, that's the time aspect of it. But let me slide this off for a second and bring up something else. Hang on, let me open one up. I don't have one open right now, but let me open one up. Here, I have one right here. Let's look at this. Alright, here. This is the micro ES. Every tick is worth $1.25, right? Now, what I was saying earlier about the options, when you buy an option, you're assuming complete risk on that option. The maximum that you're going to lose is the cost of the option, and that's probably what you will lose. If you don't make money on it, you're probably going to lose the full price of the option. So let's say you buy an option that costs you $500. Alright? Now, the things that you have going against you are that the main thing that you have going against you is the time decay. That's the main thing you have going against you when you buy an option, right? But you've accepted that you're going to risk $500 on that option. Now, if you got, like, this is a 25 range, but if you put it on, you can even put this on a 30-minute, right? We'll put I'm sorry, I don't want to put the SPY on a 30-minute. I want to put, like, the ES on a 30-minute. Right? Let's put the ES on a 30-minute. Do the ES on a 30-minute. Okay. So you don't get that many opportunities in here, sadly, if you have the ES on a 30-minute, but we're going to take off on a 30-minute. You probably don't want to have the bias on there. So in here, we'll say you got this shorting opportunity right here. Now this was this morning at 12:30 a.m. You got the blue arrow down saying to short right there. Now, if you were doing this on a 30-minute chart, the place that you would not want it to go would be above the prior swing high, right? So on a 30-minute chart, that's 57.08. We'll say just say plain 57.08, and the swing high is up here at 57.21. So that's what is that? 13 points. So 13 times 50. That's $650. So you're probably not going to want to risk $650, or you could still say I'm going to risk $650 with a futures option and with a futures contract, right? But if you didn't want to do that, let's say you wanted to risk $6.50, you could I'm confusing myself. I'm saying all the right things, but I'm not saying them in the right order. If you want to buy an option right here, let's say you wanted to buy a put right here. Now, whatever the put value is, you got to buy it, and say you want to risk $500 on a put, whether it's in the money, out of the money, whatever. You're risking that amount of money. Now, $500 would give you enough risk to get you right here, right? if you're trading the actual futures contract, you have enough risk to get you right here, which probably isn't enough on a 30-minute chart. You want to get it up above there. So you would have to risk $600 and something on the futures contract to get it up there where you want it for the option, and to have defined risk, all that. The thing that you want the futures contract to do is to get all the way down to here, right? The prior swing low was all the way down there. That's what you expect out of it, right? If we did this, the targets, well, it has a targets right in here. It probably has a target in here and here and then down here. This is 673. No, 673 is target number 1. So this is your first target. That's what you'd be anticipating out of this. Instead of buying an option, you could buy a micro or 2 micro or 10 micros. And if you had 10 micros on here, to get it up here, what did I say the risk was? $650. With 10 micros, your risk is going to be $65 or something like that, maybe $100. And you don't have the time decay problem that you have with options, because this, as it goes over here, half an hour by half an hour, the time decay is killing you. The price going down like that is great, but the time decay is killing you. If it starts to go sideways, like in here at the beginning where it started to go sideways for a couple of, an hour or so, hour and a half right there, it went sideways. You're going to lose a lot of time value right there. But if you have a micro or 10 micros, you're not losing any time value. And when it drops all the way down here, with the option for it to drop from 707, we'll say, all the way down here to 672, I don't know what the increase is going to be in that option in that big of a move. It might be 200%, 300%. But in here, you're risking with the micros, your risk is going to be $65. And from 707 all the way down to 672, that's, we'll say 35 points, something like that. 35 points times 1250. So 35 times 1250. So whatever that is, you're risking 65 to make 35 times 1250. The risk reward is a lot greater. What I want to throw out there is that you always have the micro as an alternative to options. Like I say, as an option to options. As an alternative to options, you could trade micros. And you're not going to make the same bang for buck with it when it starts to move. You're not going to make 100%, but you're going to make more risk-wise, if that makes sense to you. Oops. Does that make sense? I don't know if that makes sense. I just wanted to throw that out there. Something for you to consider that most people don't consider is that you have the alternative of trading a micro futures contract instead of trading a stock option contract. Or even an option on an ETF or something like that. All right. Now, I hope I didn't confuse anybody with all that. But the idea is you get the indication from TV trades on a larger time frame, and you can trade, whatever you want. Micros if you want. You can trade the options if you want. You can trade like the SPY options. You can trade it based on the ES, or you can trade it based on the SPY. But the idea is to minimize the amount of risk that you have. Now, minimizing risk usually means minimizing gain as well, and that is the case. But this is a pretty easy thing to do to minimize the risk. And the cost of getting in is going to eat into it a little bit. If you had a whole bunch of these going at the same time, because the round trip cost for a micro, I don't know what it is. It's probably $1 or something like that. But if you do a whole bunch of those, then it's gonna eat into it a little bit. Whereas buying or selling an actual option is probably going to be about $3 or $4. Okay. I want to go back up here. Yes, that's what I was saying, John. Scaling down to the micros versus ES puts is simpler and easier to manage, and your risk, you're always going to be able to get out of this. Whereas, if you're buying a put, there's no guarantee you're going to be able to get out of that. There's no guarantee, if price starts rising really fast, there's no guarantee there's going to be anybody that's going to ever buy that from you. And with this, you can find a seller for this. All right, So I wanted to do one other thing. What time is it? It's 3:55. There's one other thing that I wanted to show to you guys. I wanted to discuss with you. And that was these guys right here. Futures options. Now, you see how expensive they are, right? Basically, it's whatever the bidder ask is times the base price per point. Like this is the NQ, so it's 133 times 20 or 128.75 times 20 is what the dollar value is to get into or out of that. So I was saying last week when I think someone, Mark, it might have been you last week that mentioned futures options. They're expensive. Futures options are expensive, and they move quick. And like I said, with everything else, as with everything else, where there's big reward, there's also big risk. When there's big risk, there's also big reward. It depends how deep your pockets are and how much you care about accepting the risk. How much risk you want to take. But it can be good, it can be fast, and if you're using the same signals in here, you can buy futures options. And this is how you would do it. The underlying value right here in this option chain is the NQU. So if I got an indication, let's do the ES. Let's do the ES. ESU. Okay, ESU 24. And right now we have no indication that it's going to continue going down, but we do have these targets that are down here at 621. Right? 621. Come on, catch up. The market's closing right now? No, not yet. Alright, almost though. Almost. Futures options are almost closing. But so 621, if I wanted to buy a put, a 6, well, where are we right now? We're at 640. If I wanted to buy, say, a 625 put, right here, they don't cost anything right now. They're pretty cheap. They don't cost anything. You got to make sure you have good open interest. And you got to have some kind of volume, but you have good open interest. Like these up here that are only a nickel. Those are dirt cheap right there. And there's good open interest on them, and the value is here. But that's because nobody thinks it's going to go down that far. All right, nobody thinks it's going to go down to 5,600, and that could be a risk you want to take right there. It's going to cost you $250. $250 to buy one. These are $2.50. Don't be fooled by that. Actually, it's 2.5 times 50. It's actually not $250. This is the ES, yeah, so it's 2.5 times 50. So it's going to be 100 and whatever that is. $125 is what it'll be. So I mean, it's still pretty cheap because if it gets into the money, you're talking about 100x return. But it's, well, it is what it is. You can take that chance if you want to. There's big, in this case here, you're way out of the money. So the chances of it getting into the money at all, you see, it's got to get pretty close to the money to actually go up in any value at all right here. Then once it gets right near the money, then it's pretty good. So if we were really moving down and price was really going to get down to 5,600, then these would be a steal. Way up here, these would be a steal. But you get things that are way down here, much closer for the same price. So I would think that would be what you'd want to do. I only went to this one because it had open interest, a lot of open interest. But if you could buy the same thing right here, right next to the money, then that's the thing I would want to do. If I were doing that sort of thing. Okay, remember it's per point value. Like it's the ES is $50 a point times 250. That's what the cost is for that. Okay. So you see how these are going back and forth between 45 and 250, and then if it goes above that 635 or below the 635, like right in here, that 635 value is going to go up significantly. If we drop down below 635 right here, and it's trying to. As we close out the day here, we just closed out the day, so it was trying to get down there and close it out right there. But the option markets, they don't run the same hours as the futures. All right. All right. I wanted to show you this. I want to show you this little bit of stuff about futures options. Okay. Now, I don't know if they have micro futures options. MES. Let's see if they have a micro futures option chain. They do. They do. That is something. I've never looked at this before, but look at the open interest. There's like almost no open interest out here in this thing. But there are people out there, and what it would be is, in this case, it's $1.50, $1.25, I think. So it'd be 25 times $1.25 is what it would cost to get into this. All right, and you see the potential gain, as it goes up and down in between option prices right here. The potential gain is looking like it's changing about $5 or $6. So again, it's just another way you can play with it. I didn't even know the micros had options like this. But yeah, that's interesting stuff. I just learned something myself right there. What I want to show you guys, though, instead of trading the actual options on the SPY or the ES, instead of trading options on that, you can trade the micros if you want to. Okay, and that is going to give you less exposure and give you pretty good gains still. And you can scale in and scale out if you want to with that, because you're looking at bigger moves. You're not looking at the little moves that we normally look at in the morning. You're looking at 10, 20 point moves in this. You're not looking at 1, 2 point moves. Okay. Let's see. Option spread strategies are interesting. Yeah, you can do that too. You can do option spread strategies with futures options too, but you gotta have some pretty deep pockets to do that. And there's just a ton of risk. So I would refer you to somebody else like Bert, who can talk more about the option spread strategies and the risks involved. Because that's really his bag, that's not mine. Alright. I want to make sure I covered all the questions that all you guys might have, and covered everything that I intended to cover when I set this webinar up. Now, do you guys have stuff that you want me to cover in next week's meeting? I showed you the thing down here. This thing. That's not it. That's not it. That other thing that I had showed you down there, I don't know what happened to it. It's not in here. It's not one of these. It is. Well, I have to go find it. Go to Pine Editor to open my script. It was. Thought I could do these not by that. Do it by newest first. I don't know why it's not finding it. But anyway, that other thing that I created down there at the bottom, you guys are never going to actually see that anyway. It'll be built in. It'll be something that's built in for you. My whole idea of keeping indicators off the charts for you is I'm really gonna try to do that, because I think if you guys just get the indication and you're able to react to that indication, I'm showing you a bunch of different ways that you can react to that indication. You can actually buy the futures contract if you want to right here, or you could actually buy the stock if you wanted to, or sell the stock, or you could buy puts or calls on the stock, or you could buy micros based upon the puts or calls on the stock, or you could buy futures options based upon the indications. I just want you guys to see that there are so many ways to make money, and futures is what it is. I trade them every day, and I do pretty well with it. I know a lot of people, they try to do what I do every day, and they struggle. And I think a lot of it is because it's really fast, and they don't. I've been doing the same thing for years and years and years, and most people haven't been doing it for years and years and years. So they have a hard time having faith in what I'm telling them, and and what they, you can go back and look in hindsight and see, yeah, this did work, and this did work, and this did work. But then when it's in real time, you're saying, well, this did work before, but it didn't work sometimes before, and you start second guessing yourself all the time. And that is so easy to do. Whereas with this, you get an arrow, you just trust the arrow. If it's wrong, it's wrong. And you know pretty quick that it's wrong. If you want to use derivatives, that's all that stuff that I just showed you how to do. You can multiply your earnings quickly with that. I showed you ways to minimize the risk on that, and I can, my goal here is to show you more ways to minimize the risk when using derivatives. Because usually what you want is minimal risk with maximum profit, and and there's a lot of ways to get to that point. Examples of how I trade futures. Well, I trade futures all the time. The way that I do it in the morning, Shabab, or the way that I do it, in here. I mean, the way that I do it in here is there's really nothing to show. I mean, I trade them, but well, the morning's a whole different thing. That's a whole different system. It's it's a whole different thing. That's a training. It's an education. Where this is just showing you how to use the tool that you have. That's what this is, showing you how to use the tool that you have. Best use the tool that you have, and how to use some derivatives to use the tool that you have to make the most out of the indications that you're getting. You don't really have to learn anything. You don't have to learn how to trade. You don't have to learn, that the markets are always, they have measured lengths, and that the markets, what a trend is, and when to see a trend is failing, and when to see, you should stop trading in one direction and things like that. You don't have to learn that here because it's all built in. Okay, but that's part of what I do in the morning. And I've been doing that for a very long time. Very long time. Some of you guys have been here for over a decade with me doing that stuff. Some of you guys actually met me in Kansas City. Or Chicago. The seminars that I used to hold back in 2014. Alright. That's it, guys. It is 4:08. I ran over a little bit. I'm sorry about that. If you have questions about anything, you can email support@targetviewtrades.com. Support@targetviewtrades.com. Again, if you're in here and you haven't, that's the thing I do in the morning, Shabab. If you're in here and you haven't taken the trial, go here to Target View Trades and sign up for the trial. It's on the home page. You can go to Target View Trades /trial, but just go here. It's on the home page. It's in two places right now. I'm actually going to stick something else down here so we don't have two of them right in a row like that. But just sign up right here to take the trial, and yeah, all that. Wow. All right, I'm gonna have to. I thunder lightning outside my house right now. I'm gonna wrap this up before I lose power again. I want to thank you all for coming today, and really, if you have any questions, email support@targetviewtrades.com. All right, everybody. Thank you all for coming. Thanks for the questions, and I will be in touch. Okay? Alright. I need to somehow figure out how to end this webinar now. Let me shut the recording off. I'll start there.